What if I told you that I found a company whose stock was about to go on sale, or at least that's what I think is going to happen, has incredible numbers and looks really good, and pays a strong dividend and has an incredible history of paying strong dividends to its shareholders? Would you be interested? Well, I have that stock. I'm going to show you all the back end of that stock, show you some of the financial data, a couple of articles on it, some charts on it. Now, before we get into anything, I just want to remind you, I'm just some knucklehead, don't necessarily want to invest in things I invest in. I'm just telling you what I'm doing, why I like things. You make your decisions for yourself. It's not investing advice. However, learn what you can, then do your own research, and you might find that what I'm talking about here today is right for you. Hopefully you do. Let's start out with the numbers right now. So this company has almost $100 billion in market cap. It's got a price to earnings ratio of about 26 and a dividend yield of 2.4%. Now, revenues, if we look at the quarterly revenue growth, it's this beautiful chart that just continues to grow and go up constantly. If you look at the cash flow charts here, again, just beautiful curve to it. And now I've pulled this up with the free cash flow and the stock-based compensation. So you can see that while the cash flow is growing, it's not being heavily diluted by the company. There's a lot of companies where you can see cash flow increasing, and yet they're compensating employees so much with stock that it's eating into the amount of increase. That's not the case with this company. Now, when you look at the cash and debt that's on hand, you can see that there's about $3 billion on hand, similar amount of debt available. So basically, it can be paid down at any time, but there's a lot of room to maneuver usable debt plus cash that's available. And for the amount of market cap, this is a very, very small amount of debt that they're carrying, which seems great as an investor. I don't want to see a company that's just burdened by a bunch of debt. Now, on the dividend side, this company is awesome. On a 10-year scale, we have a 12.76% return. That is fantastic. That's a great growth rate. They've been around since 1949, have been increasing this dividend. We're now up to $1.40 per quarter. That is an awesome return. Now, on the shares outstanding side, you can see that this company's been slowly shrinking the total supply of shares, which helps us as investors to gain more value per share. I changed this over to an annual view so you can see it represented there as well. And I just want to show you like a typical company that you just want to see a higher return than what it costs to borrow money, right? So when a company is, say, returning like 12% or something, you feel pretty good about that as an annual return. Last year, 54.5%. That's amazing. That's an incredible return. And you can see that even bad years here, like the lower years on the previous decade, you're looking at 23% returns as being the low. And you see this kind of strength in these numbers where you're just getting huge returns on your capital employed. That is a business I want to own for sure. So what is this business? What are we talking about? We are talking about automatic data processing. Now, this is not a company that I had even heard of until maybe a year ago. And when I started looking into the numbers, I was absolutely blown away. So you're probably asking, how do they earn all this money? What does this company actually do? ADP provides HR and payroll services via cloud software to over 1 million customers around the world in over 140 different countries. So employers are basically able to outsource all of these expensive departments that they would normally need to hire themselves and hold in-house. And because of that, they're able to save money, which betters their business. So they're able to say, hey, I want HR services, I want payroll services, I want all these things taken care of. And you can integrate, and these are not just private businesses. You're going to have a lot of government contracts as well. So these are going to be fairly stable, even in potential economic downturns. Now, as far as challenges, I would say the one thing that does concern me is we just don't know really any business. This is a threat to almost any business. If you're not developing artificial intelligence, it has the potential to impact almost all businesses around the world. And though ADP is actively integrating AI into all of their services, we just don't know if there's potential for another AI service to disrupt the business. That would be probably my primary concern with this company. Even if AI does come in and really start to rapidly disrupt this industry, there's a lot of inertia built into this, because to build these systems, to prepare an employer and to know all their employees and their data and everything and get everything set up just right for this company can take years sometimes. If this is a large enough client, I was reading through the annual report and they were saying some clients are online and ready to go within 24 hours. Some take up to 2 years. So if you have a gigantic workforce and it really takes a long time to integrate and build all the right tools and everything, get all the data set up, I think there's so much inertia built into that even if you did see a competitor come in that had some strong AI disruption to this market, it's going to take a long time for this company to be truly disrupted and displaced. And for that reason, I think as an investor, you would have time to say, hey, I see a problem. I see somebody else coming in. I need to now move out of this company. But I don't see that being a huge problem as of right now. I think that is maybe my only concern, but it's not a huge concern because of all the inertia built in. Let's go ahead and read a couple of articles. I want to give you some positive and some negative spin, and then we're going to look at the price chart. All right, so this article is 3 insanely cheap stocks set to benefit from AI tailwinds in 2024. It lists ADP, GoDaddy, and Qualcomm. Let's go to the ADP portion really quick, and we'll read. So automatic data processing is a well-established player in the human capital management sector, or HCM, which is all the HR and payroll and all that. As the sector rapidly embraces automation, AI will be pivotal to ADP's long-term strategy, which they outline in their annual report. They are not only constantly investing into research and development, but AI is really where they're trying to push their tools next so that they're performing even better and not getting left behind. ADP remains ahead of the curve when it comes to the implementation of generative AI and machine learning principles for business. Real good news right there. Its generative AI platform, ADP Assist, offers robust AI capabilities from the industry's largest HCM dataset. It can validate payroll information, detect fraud, offer insights, and answer questions about all aspects of the HCM experience. This will be extremely beneficial to its more than 1 million paying customers and further strengthen its already high retention rates. Love that. I think I agree based on what I'm reading in the annual reports that this is a company that I'm just excited about where they're going. I'm not worried. I think the reason I bring up AI as a concern is that it's there. And we don't know what it's capable of fully, right? It's like a baby. It's like an infant, and you don't know what it's going to be when it grows up. Same thing, right? We just don't know what's ahead. It could turn into something we've never seen before. It's most likely to surprise us in many ways. So we can't really estimate that. But it's good that if nothing else, this company is using artificial intelligence to bolster its position. All right, now let's take a look at the negative spin with this article. Job creation slows amid big cuts in manufacturing. So this was the other concern we had. That recession-proof company, yes, it's made it through a lot, but that doesn't mean that it's necessarily going to have great years over the next couple of years if a recession does come. All right, so ADP released a report, and it showed that the private sector added 152,000 jobs in May, down from 188,000 the month before. Now, if you've been watching economic numbers, what continues to come out is that there's data that comes out and then gets revised down, and it comes out and it gets revised down. So the government is basically like juicing some numbers. ADP showing, hey, these numbers are on the decline. This doesn't look great. And I think we're just seeing that constant revision in the private sector. We're seeing a lot more government jobs. Those aren't profitable jobs. They're not good for the economy. That they very rarely provide to the economy. They often take from the economy. So when you see private payroll and private sector numbers dropping, that's usually a sign that we're seeing the beginnings of a recession. We're seeing things on the decline and that things may not be good moving forward. And that is definitely a negative for ADP, who needs those employers healthy in order to maintain its customer base. Job gains and pay growth are slowing going into the second half of the year, said Neela Richardson, chief economist at ADP. The labor market is solid, but we're monitoring notable pockets of weakness tied to both producers and consumers. What I think this article is really pointing at is a potential sale that could happen on the price of ADP, which is good for you and I as investors, right? Now, I own this company already, so I don't want to see its price go down. However, I wouldn't be too disappointed because it means I get to get more shares at a discount, and this is a strong dividend payer that has not reduced its dividend at any point. So if it continues to pay that out to its shareholders, well, the price is going down. That just means that our return and our price point is getting better and better along the way, and I'd be definitely okay with that. I would like to see that and pick up some more shares and then allow things to recover and see those shares and dividend continue to rise over time. Now the part you've probably all been waiting for. Let's take a look at that chart. All right, so I'm pulling up a weekly chart here, and this trend line you can see is going back to about 2017, and it's this really strong channel that this is in, where you've got this, you've got the highs that are all bouncing off, and you're holding the COVID low all the way through as well. So a really strong pattern that's held for a very long time. This is the weekly view. We've had a pierce, but then a recovery, and then we pierced it again, and it looks like we're not going to recover. So if we don't come back into the channel this week, which it does not look like we will, then we're looking really at some kind of a breakdown. It's likely to drop and then maybe consolidate and potentially head lower. I don't know how low this will go, and I'm not going to speculate. But what I am suggesting is that we're potentially going to see this stock kind of go on sale. All that means is that I'm going to be getting a better price on this dividend-paying aristocrat, and I am excited about that. So watching this really closely, you're seeing this kind of wedge formation. I think we're seeing breakdown out of this wedge, and if that's the case, if you break this channel and this wedge to the downside, I don't know how low it's going to go. I think we will see it fall a fair amount. Targets that I would be looking for major support are like right in this region right here. It just touches a lot of support lines. And so I think we might see a breakdown maybe as low as like 211 would be possible right now. We're looking at 234. That's a pretty sizable amount. You're looking at almost a 10% drop there. And so I could see about a 10% drop being kind of a max. But I think after that, you're just going to see plenty of support. Now, again, if we see a wild like freak event where the world economy just goes into the toilet, then yeah, we could see some problems, right? That could be problematic for us, and we could see more drop. But I think with this this trend going back pretty far, all the way from the 2020 high, all the way through these most recent lows, I don't think we're going to see it too much lower than this, based on how strong this trend line has been in the past, and that the performance of the company is just so strong as well. That is my guess. I have no idea what's actually going to happen. We'll see, but I'm A-okay with this getting discounted and then trying to buy more shares. This is a company I already own, I want to own more of, and I will continue to buy. That's it for this one. Let me know what you think. Do you like this company? Do you not like it? Are you interested? Do you think I'm an idiot? Let me know down below, and I will talk to you next time. Thanks for being here. Thanks for hanging out. Hey, thanks for hanging out with me today. If you enjoyed this and you're up for helping the channel out, like it and sub it below. See you for the next one.